Hey, good morning, YouTube. Johan, I'm back with the second video. It was a while, I know. I'm sorry, I'm so busy. I got involved with a company again that's giving us Forex education and also doing network marketing with the company. It's an unbelievable company. I'll show all that things to you in the near future. Excuse me. So, on our last video, the first video that we did, we spoke about the three apps that you needed to download, and I hope you guys opened the Tradingview account. You opened the MetaTrader 4 the app and account, demo account on your phones. So today we'll go a little bit through how Tradingview works and some patterns in the market, and we can also go into exiting a trade and entering a trade, what you must do to exit and enter the trade and so forth. So the first thing I think we must do is let's just use any pair. Let's use Euro Australian dollar. Take everything away here, and then this is Tradingview, guys. I hope you guys played a little bit around with this thing. As you know now, anywhere on the screen, if you right click, there's settings. You can change the color, the appearances, the background. You can make it white. You can make it gray. You can make it whatever you want. I chose the colors that I like. The symbols is for the candlesticks, so you can make it yellow if you want. Whatever suits your eye better, whatever makes you see things a little bit better. It's up to you. Use whatever you want there. It doesn't really matter. I just use blue in the academy that the guys teach us. They use blue and red when I started, so it just got stuck with me. Okay, guys, so then I want to show you a little bit of what we trade, what we need to look for. There's movements in the market that goes like this. The market goes up, then it makes a retracement, a pullback, or a flag. This is a bullish flag. Bullish means we're going upwards. It means the market's in an uptrend. And bearish means the market's going downwards, we're in a downtrend. And this is a bearish flag like this. And this pattern is for continuation. So you get a impulse, then you get a flag or pullback, and then you get an impulse again. So we'll get to Elliott wave and things so that I can explain to you. But how the market, in a short note, just how the market moves is that it makes 5 moves like this: 1, 2, 3, 4, 5. And then you get the 3-wave move down like this, and then it continues 1, 2, 3. So obviously, excuse me. So obviously the bigger picture, or the bigger moves are the 5-wave moves. This is a 5-wave move. Then the pullback is a 3-wave move, and then we get a 5-wave move again. But in this 3-wave move, here is also 5-wave moves. 3, 4, 5. And then in the pullback, you get also 3-wave moves like this, ABC. Then there's 5 here, like that. 1, 2, 3, 4, yeah, 5 like that. So this is more or less how it works. It's always flags. It always gives you pullbacks, and it's the easiest thing to notice in the market is the impulses. There's an impulse. There's an impulse. There's an impulse. There's no need for you to ever go and study what an impulse is, what it looks like. You can definitely see what it's about and how it moves. The thing that you must study is the pullbacks. Now, the pullback, if I were you guys and starting with a pullback, I take the top to the bottom. Let's just make this a little bit lighter. So the market came in this there's a pullback happening. I was from there to there. So I would take the high and the low of this thing and go and study what you see here. There's different patterns in the pullbacks. There's different patterns and pattern types that you can get in the pullback. Most of them, let's say they can come like, for this instance, it's coming down. So if there's a pattern here in this box, what it normally does is from the bottom, it makes the A, B, C move like that. And then remember the 3-wave move and then the continuation down. So some of this, I don't know if you want to see a 3-wave move in this. Some guys will say, no, there's nothing there. You must go and study the patterns, the The pullbacks, that's the important thing. If you understand pullbacks, then you'll be very successful in the market. Now, the way that I do it, I'm looking for flags. Flags is something that's a little bit easier for us, you know. So if I see the market is doing this, then I know, okay, this can be a flag. But once I see this and the market starts to do this, then I'm not sure. Then you can't say, okay, listen, it broke my trend line, and then I'm going to take the trade and things like that. If it does that, there's a certain pattern or certain way I would enter the market. Let's say I'll take the low, and whenever the market comes down, whatever pattern it's doing here, it can do whatever it wants. And whenever it comes down again and crosses the low, then I'll put my entry in here. Stop loss above, and then we'll see how far we can write this thing down. So this is the one way you can enter it. The second way is if you see a nice flag. Let's just go and see if we can. There's so many flags here actually. I just want to show you guys the nicest one I can find, so that it looks. Let's go to a different time frame. Let's go to the 4 hour. I just want to just bear with me here. This one. Now look at this thing. This thing is perfect. This is the flags that I'm looking for. Impulse like this. Then I'm looking for a perfect, nice flag. It looks like a flagpole with his flag to the side here, and then continuation to the upside. So this is exactly what I'm looking for in the market. If I see something like this, this is where I'll get involved. We're not going to go through how to get involved or how to enter this thing. I just want you guys to go and see the patterns in the market. There's different patterns that we use to trade. That's the one is the continuation. So it's a flag, then it's continuation, or you get the bearish flag, then it's continuation. So the one is bullish, the one is bearish, but you also get reversal patterns. So if there's the market's coming up like this, it doesn't have to be an impulse, but then suddenly the market will start to turn like this and form a channel where the candles will get smaller and exhausted. You'll see some exhaustion and things, and so all of a sudden it reverses. So this is a ascending channel. It doesn't necessarily need to be by support and resistance. I would like you guys to forget about support and resistance, because that's the first thing that 90% of the traders in the world go and learn about and lose money about. If you don't know how to trade, forget about it. The patterns is much easier. And this is the one for down. So let's say there's an impulse down and the market starts to make a descending channel. So the D is for down. I always remember the D is for down, descending, and the ascending is for up. So this one will do the same thing. The market will up, down, and then there will be a reversal. So this is the two patterns that I trade that's very successful. So the success rate on them is very, very good. So let's go and see if we can find something like this. We can find where the market moved in that kind of patterns, and where we could say, okay, but listen, this we can see something here happened, and that's why there was a reversal and things like that. So for instance, here you can see there's all this sorts of patterns here. I just saw this head and shoulders while we just opened this is the inverted head and shoulders. There's the left shoulder, there's the head, there's the right shoulder, or some people will say the right shoulder can be this one, and the head and shoulders. So some people is trading these things. It works. It's a very good strategy. But what I just showed you, the impulse, and you get the flag. So you're gonna trade this thing. Then you get an impulse. This is not a flag. This is like a V. So what happens now? You get this impulse and you get this flag. So you trade again. You don't wait for the head and shoulders. You trade the flags. There's an impulse. There's a flag again. So then you will continue up. So but the most important thing on the previous, I think on the previous video we spoke about how the market moves. The market goes like this. It goes up, down, up, down, up, down. And every time it makes a high here, and it makes, let's say the market came from here. So this was a lower high than this one. This is a higher high. This was a low. This is a higher low, higher low, higher low, higher high, higher high. So it's making higher highs and higher lows. As soon as you see the market like the head and shoulders here, what the head and shoulders did here was it took away, there was the reversal. Head and shoulders a reversal pattern. So I just want to show you where the higher highs stopped and where the lower highs stopped, because this was a downtrend, this was an uptrend. So with the downtrend, the market's coming up, making lower lows and lower highs like this. So if there was the high, then this is a lower high, this is a lower low, lower high, lower low for downtrend. So let's delete everything. You know, now we're looking for lower lows, lower highs. This is what happened with this one. So let's say the market came all the way down here, making lower lows, lower highs, then a strange one, lower high, lower low, lower high, lower low, lower high. Came all the way down like this. So there's the lower low, a lower high. Then what happened? It made a lower low and a lower high. You see, it's still lower than this one. But now, all of a sudden, there's a higher low. You can see this low is higher than this low. So this means something is happening here. The market wants to go the other direction. So you first saw this higher low, then you get a higher high, and you get, okay, this is a double bottom. This is a double bottom, it's equal, but at least you saw a higher low and a higher high. So you know this thing is definitely going to the different direction, in a different direction. So what this means is you're looking for reversals. Some people take a trend line and put it in on the side of the, let me just show you like this. And you can say, listen, okay, as soon as the trend line is broken, but now the question is, do you put it like this? Because then you want to go and buy here. So, or do you put it by this week? Do you put it by there? Do you put it there or do you put it there? Understand? So I'm looking for lower lows, lower highs. That shows you exactly what is going on. You can see here, there's a reversal. So we got the impulse here and we got the flag and then continuation. So I would definitely have bought in this flag and sold here, sold there, because we had an impulse. Okay, well, this is almost the same height, so maybe I would have left that one alone. But that's the first things we are looking for. I just want to show you guys if we can get a reversal pattern, except for the head and shoulders, but where you can see why the market came in the other direction. Just have a look here. I wish, I'm just gonna make a circle around this area so that we can go to the daily. I just want to show you the descending channel here. The descending channel that I'm seeing there. I hope you guys can see it. Where was it? Okay, yeah, this is exactly what I was talking about. So take a look at this, guys. I'm just going to make this a different color. Let's use green. So we came down, made flags, made higher lows, lower lows, and lower highs, all the way like this. Flags, impulse, flag, impulse. Then here, the impulse and things. Remember, I said it's getting smaller candles, but it's still getting. It's like in a channel. They are moving in a channel. So then here, this is also the reversal patterns that we trade. So what I would have done here is mark a trend line like this, and whenever on the lower time frames we get this breakout, I would have taken this trade. But usually when this happens, there's a reversal. So this was the first sign of a reversal that came much later. So this is a descending channel that was a reversal that the one that I wanted to show you guys. Let's see if we can get something else. Let's go to weekly again. I hope you understand the market moves in this pattern. So as soon as you can learn and understand the patterns, the movement of the market, then you can predict what's going to happen long before it even happened. I was looking at the while I was learning and studying the markets and how it works and what. We had the market was doing something like this. It came up, down, and we had a large push, and then we had that channel like this. And I think it was 2 years ago, and that guy told us on that scene, he said, I can't remember what it was. I think it was in the DXY on the dollar itself. This guy said, listen, before I even understood what this channel was, this is a reversal channel. So while this, I can't remember who was the president of the United States, but he said he's feeling very sorry for the next president that's coming, because this move is going to come on the dollar. So you can say it's news. You can say, in our case now, it's Corona, or there's no such thing as this. He told us 2 years before this thing crashed. He was feeling sorry but now it's Donald Trump, and the market crashed tremendously like this. And everybody think, yeah, he's a bad president, or he's not doing things right or whatever. It might be the case, but whoever this president was, this move was coming. There's nothing you can do about it. This impulse move is telling us this is coming, and now for continuation. So let's say the next price event jumps in here, and this move happens. Now all of a sudden he's the hero. The market structure is telling you exactly what is going to happen. We knew that years and years before it happened. And it's the same thing as you move, if you move through the market like this, like I just showed you the head and shoulders here. So you tell someone, listen, the dollar is going to turn around. They're going to say, no, you're lying. How do you know this? You can see the patterns. You can see what is going to happen. So you must try and learn the patterns for yourself. So then you can know, listen, I can see where the movement are. I can see lower lows, lower highs, like this. So then there's pullbacks like this. And this is where we want to get involved into the market. I'm going to learn you all about these patterns, how it works. This is also a reversal pattern, but this is the A, B, C that I explained, and then continuation. So there's many different things that are happening in the market. I just wanted to show you this. But guys, go through Tradingview. If you open these things, there's trend lines. You can put trend lines here. There's horizontal lines. If you want to plot some areas that's important for you, you can move them around. Vertical lines, I usually use the vertical lines with some of my indicators below, just to let me know where price is exactly, something like that. And I don't trade with indicators just for my entries. Some arrows, you can show the people is going down. So it's just drawing tools. Then this is pitchforks, something different that you can, some people draw pitchforks on harmonic patterns. If I can show you one, let's see if I can get one. Yeah, harmonic pattern is a very specific pattern, advanced pattern inside the market. So you can get harmonic patterns like this, and then the people put the pitchfork like this. Some people trade like this style. Whenever the market comes bounced off this thing, it takes a sell. Whenever it comes there, bounced off this one, takes a sell, bounce off here again. This week they would buy. So there's so many different styles. All of the styles work. Like I told you guys, listen, take one style and master that style. So the style that I'm going to show you guys works perfectly. We're looking for impulses, and we're looking for flags, and we're looking for continuation. That's all that we're looking for in the market. You'll see, I'm struggling to see some reversal. Yes, a sort of a reversal pattern here, but then it should shoot up. But this, look at this reversal channel. This, let me take a straight line here. Look at the smaller candles doing this and doing this. So this is telling you, oh, well, obviously it's time for a reversal. It should, maybe this thing is shoot up in on the 4 hour, maybe for a day or two. This could have been some news or what, and then the market reversed because of what this pattern is showing us. It's not a good example. Let's just take another pair here. Let's have a look at the Euro JPY, or let's use USD CAD. Let's only use USD CAD and see what we see here. Let's go to the monthly and see what the market has done for the last few months, for a few years from the beginning. Let's check this thing. Let's see what we have here. Okay, so the market started making higher highs, higher lows. Then it made a flat consolidation. Then it continued making a flag there, making a bigger flag, continues. But this thing is more like a, look at this ascending channel. Then it broke lower, made a lower high. Then we got the continuation there, flag. Look at this nice flags. Then it got here. Remember this flag, it's still a flag, but you are not involved in this flag because you only take the trade when the break is here. I'll show you the strategy when we get there. So this thing broke up, came all the way down, made a descending channel here. Look at the candles there. And then it broke up again, starting to give us some flags. Then we had, let me just delete that one. Then here we got to an up point. There's like a hammer candle, something there. Then we had an impulse, flag, impulse, flag. This is not an impulse. This is a descending channel, and now we're starting to move up again. So you can definitely see what's going on in the market, how it's moving. It's not that nice to see it on the. I wanted to show you guys a little bit better, but there's nothing nice that I can show you. I can only show you the flags and things that I'm trading. So I'm waiting for Nice impulses, the flags, and then the continuation for the trades. So we'll get to that, guys. This purpose was for TradingView to see Elliott wave is just going to show you the ABC moves as a flag for continuation down. Elliott wave, the 5-wave moves. Then the long and short positions. This is when you want to buy. Let's say you were here and you wanted to buy, stop loss here and take profit maybe 5 times to that size. So this for buy, the other one short is for sell. So your profit's below, stop loss above. Then there's bar patterns where you can copy this and take it to a certain place and say, listen, predict the market's going to do that. There's some symbols here. You can put some things in this one. The ruler is to measure. So from there, you can measure the pips. You'll see on the inside, it says 2145. So this was 2,145 pips on the USD CAD. Guys, you must go and play with this thing. This thing is critical to use. You need this. You need this to do your analysis, to do everything you're going to need, your stop loss, where's the prices and things like that. So what I want to do now, I want to show you if we enter the market somewhere. Let's go to a flag and we enter. I just want to show you how MetaTrader works and what you would do with the MetaTrader app as well. So let's use this thing. We had this impulse and we had this flag. Now we had this flag from there. So what we do now is once we get the confirmations from all of our trading plan, let's say our trading plan has 3 or 4 confirmations we're waiting for the buyer, and it happens, then we can place this thing here for a long, and then we have a certain way of calculating our risk. So the risk will be somewhere there, and then a certain way to calculate how many pips take profit 1, 2, 3 must be. So what happens now is you'll see the entry of obviously where the price was when you entered. Let's say the price were here, then you entered there, so the entry price will be the same. The MetaTrader 4 will know where the price is, what the entry is. Your stop loss will be in red. So if you open the MetaTrader 4, I hope you open a demo account. If you guys didn't open a demo account, you're struggling, let me know. I'll help you open the demo account and set it up for you as well. I think I'll do a video on that as well. But when you open it and you take a trade on the USD CAD, you open USD CAD, you say market execution because it's a direct order. So you put your stop loss, you take profit, and then the blue will be, if you say market execution, you'll see a green line. So the green line is for your take profit, and the red line is for your stop loss. So then you just enter these 2 numbers and you say buy. And then you'll be in the trade, and then hopefully the trade will go in your direction. If the trade moves a certain amount of pips, then you take your stop loss, your risk, and you put it at break even. Let's say you take your first take profit there, your second take profit there, and your third take profit there. So now at break even, this is in the bank, money is in the bank, and now the market reversed on you, take you out at break even. So there's no loss, risk free, no problem with this trade. Perfect trade. Some trades go a little bit further, other trades doesn't go that much. So it depends on what the market is doing. So this is the one TradingView is the one that I wanted to show you, and MetaTrader 4, how to enter the trades. You just put these 2 things here. For long is for when you buy, and short is for when you want to sell. The green and blue, the green and red is for MetaTrader by the green and red lines, and then buy and sell as you need to do. The other one is the Forex Factory, the Forex calculator. That's very, very simple, guys. You're gonna go to wherever, let's say let me open my Forex calculator on my phone. Let me just see for the exact numbers and how it looks exactly. The Forex calculator, it's opening. So what it says is position size. That is for your lot size, so you can know if you just want to risk 1% of your account. So let's say you have $1,000 account, then you say 1%. So I only want to risk 1% of this. That I think is $10. And so you put $10 at the trade, but now on this calculator it says account currency. So if your account is in USD, you put in USD. Then the currency pair. Currency pair is USD CAD. It's on the top left here. USD CAD is the currency pair. Then it says your account size. So you're going to put in 10,000. This is not 10,000. You're going to put in 10,000 onto your account balance, and then your stop loss in pips. So let's say you've worked out your stop loss. You want to enter the trade here. Your stop loss is this. Your take profit is that. Then here on the bottom it says, here it says, I'm going to show you now there and there. In that circles, it show you your stop loss pip in pips is 41.8. So you just make 41, and that one take profit is 261. So there where it says account balance, you put 10,000, then your stop loss in pips is 41, and then your percentage risk, the percentage risk that you want to take. So you said you put in 1%. I want to put a risk 1%. Then you say calculate, and it will calculate the lot size. So what the lot size is at your MetaTrader 4, you'll see at market execution, it's going to give you a red line and a green line like this. This one will be red. So your stop loss goes this side, stop loss, and your take profit goes to the other side. Let me just, this one is green. So let's say we want to buy or sell, doesn't matter. They always go to the same colors. So buy and sell, or the stop loss and take profit. Then on top, you'll see lot size. There is something that says lot size. Now what that means is the size of the trade that you're going to take. You're going to calculate, or you're going to tell the MetaTrader 4 what is the value per pip that you want to trade with. So let's say the market goes from here where you're buying for 120 pips. So if this 120 pips was at 0.01 lot size, then it means each pip would have been 10 cents. And that equals the 120 pips. This movement would have been $12. This 10 cents, 0.1. Yeah, 0.10. So that would have mean that you've made a $12 here. So the next one is your lot size. So the calculator will tell you what your lot size is. The lot size can be 0.28 according to your account size and the amount of the percentages that you want to risk on your account. So it can differ. There's a big difference. It can be a difference there. I just want to show you the lot sizes, how they work. So the first one is 0.01, then you get 0.10, and then a standard is 1.00. So this is a standard, this is a mini, and this is a micro. So the micro, the worth of this thing, if it's 0.01, it's 0.10 cents. So this is 10 cents. For 0.01, it's 10 cents. 0.1 is $1 per pip. It's $1, and 1.00 is $10 per pip. So for each pip, this thing moves. For each pip, there's a pip, 1.6 pips. There's 2 pips. It goes up like this. So if it goes 120 pips like this, that would have mean this trade, if you put 1.00 on this trade, you would have made $1,200. While with this one, you would have made $120, and with this trade on the 0.01, you would have made $12. So it's the same movement. It's just the lot size is calculating the value per pip. So on the top, if you after your forex calculator, it will show you exactly if you calculate what the lot size would be, and then on top of your MetaTrader 4 on your phone, you put in your lot size. You'll see there's minus 0.1 and there's minus 0.01. So that just means you can press the 0 until the middle amount is whatever you want, and on this side it will be a plus 0.01 and plus 0.1. So if you want to make this 1, you just need to press the plus 10 times, then you'll get a 1.0. It's very, very easy, guys. I know it's a little bit confusing right now. You guys are welcome to phone me or to leave me a message and say, listen, we explain this again. But we are going to get to all the live trainings and things. I just wanted to go through the 3 apps that you downloaded and the Tradingview. So use this. The next video, I think I'll make a video tonight if I get some time about structure. Like I said, we did go through a little bit about flags and how the market moves. Then I'll show you this indicators that I'm using. Let me just go to the template testing. This was for back testing. This is the indicators that I use only to enter the trade. I use the ATR for my risk management. This MACD is for momentum indicator to see if the momentum is still on my side, and then the moving average is for my exit indicator, and the rune is my entry. So once I see a flag, then I go and I open the indicators, but structure and flags and everything I do naked trading. So after this flag, after you see this and this flag, I'm ready to enter. I just go to the MACD, to the indicators for extra confirmation to take the trade. So that's, but I'll show you everything on the next video, and then you guys can just let me know how far you are, what you're struggling with, and things like that. All right, thanks guys. I'll see you soon. Thanks.